Good morning and a happy new year. And we look to the Australian dollar testing new highs at 78 cents this morning to start 2018 as renewed commodity price improvements and broader US dollar weakness, as well as a widening gap in bond yields, have helped to push the Australian dollar higher into the start of this new year. Now, whether that can continue, we're looking at a wide variety of spreads for the Australian dollar throughout this year, with some analysts pricing in levels around that 68 cent barrier and others expecting gains into 82 cents. Where do we sit in between? Will be governed by a few key factors throughout the year ahead. Of course, the RBA at the moment is tipped to leave interest rates on hold through the middle of the year and possibly raise rates into the second half, possibly August and December. If, however, these commodity price improvements continue and we do see a pickup in Chinese manufacturing this week, there may be some optimism for an earlier rate hike, which could lend itself to a push through this 78 cent handle. However, we are still seeing support on moves towards 80 cents at this point. Going forward as well, we are looking at some broader US dollar weakness at this stage, and that comes as we see a number of other central banks coming into the frame and possibly tightening their own monetary policy platforms and joining the Federal Reserve in raising interest rates. Despite signalling 3 hikes at the end of December, there is some pessimism in the market as to whether the Fed will actually deliver, and a greater focus has been put on the longer term low cap policy, balance sheet rebalancing for the US, and as well as that also the benefits of these proposed tax reforms. Looking forward, we'd imagine we will see some support for the Australian dollar through this week, and we'll look to US non-farm payrolls as well as a guiding factor through the first week of this year, but we'll be watching sort of 77.30 on the low side and rallies up to 79 cents. Thanks for watching.